Hey everyone, Chris Pulver here, and welcome back to another segment of the Pulver Report, where we trade to be profitable, not perfect. In today's segment, I'm going to talk about my favorite type of price styles, how each of them work, and how they may even help you decipher price action faster and make better trading decisions. So let's get started for today's Pulver Report. Okay, imagine this. You're staring at your chart. And you have no idea what you're actually looking at. And you want to trade. So this is probably something that we should figure out. So what are the different types of price styles that we can use? A quick list includes the following: line charts, bar charts, candlesticks, Heikin-Ashi candles, Renko charts, and line breaks. And when you look at each different price style, they all are trying to communicate to us somehow what we can do. Price was here, now it's here. What does that mean for you, and what decisions can we make from that movement? So let's begin with the line chart. Line charts are really simple. They just display a series of data points and connect them with a straight line. Usually the line charts are only showing closing prices, and all we're doing is connecting the dots to those closing prices. Right? This helps reduce a lot of intraday noise, and commonly you'll see line charts on really simple applications like Robinhood. If you go to Google Finance, Yahoo Finance, they show the overall trend and trajectory of the asset based on historical prices. So why don't we always use line charts? Because they are so simple, and just connecting the dots on closing prices typically, we can miss out on price action patterns and market structure that we can see with other price styles. So if you're looking for a little bit more information in your charting, if you're looking to upgrade, maybe you want to move to the bar charts. So bar charts contain open, high, low, and close levels, but they still maintain the simplicity of a really clean chart. The vertical line measures the overall high and low. The small horizontal line on the left is the open, and the small horizontal line on the right is the close. Some bar charts are even color-coded to show bullish and bearish closes. So if the open is lower than the close, that bar is bullish. And if the open is higher than the close, then that bar is bearish. So bar charts show a lot more information than just the line chart, but they're still pretty simple overall. And this is kind of the standard or the bare minimum for technical analysis. Open, high, low, and close. Try to find support, resistance, overall trends, trend lines. What's bullish, what's bearish. This is the information that the bar charts will provide, so it's a nice upgrade. But if you want to give your bar charts a little makeover, then you will move into candlesticks. So do you like the open, high, low, and close information? Check. Do you like the body of the candle representing bullish or bearish price action? Check. Would you like certain patterns to exist within the candlesticks, like decision and indecision candles, to help us with your analysis? Check. Would you like to see the close of the candle or the body close above support and resistance or on the right side of a trend line to help us confirm whether we are buying or selling? Check. Would you like candles and candlestick patterns to help provide structure in the market with actual candlestick patterns? Check. So you can see that candlesticks check a lot of these boxes for technical traders, and they have been around for a long time. In fact, like over hundreds of years. They originated in Japan from rice merchants and traders tracking market prices and momentum long before being widely adopted in the United States. So we could say that the candlesticks are the OG of price tracking. So fun fact, candlesticks can be used on 1-minute charts all the way up to daily, weekly, monthly, even yearly charts. And if you're really loving the candlestick patterns or candlestick charts, there are over 42 candlestick patterns that have been documented for technical trading. Now my recommendation is you find your favorite 5 bullish and your favorite 5 bearish, and you focus on them to aid your decision making. So let's continue our little makeover, give the candlesticks a little foundation and some contouring, and guess what you'll be looking at? You'll be looking at the Heikin-Ashi candle. So Heikin-Ashi candles are visually really trend friendly. In fact, the Heikin-Ashi actually translates to average bar. And Heikin-Ashi charts will often maintain that trend color more consistently than regular candlestick charts for traders that prefer to follow the overall prevailing trend. So let's compare the same instrument. This is a chart of the QQQ, or the NASDAQ ETF. Camera 1 is the OG candlestick chart, and camera 2 is the Heikin-Ashi candlestick chart. I want you to notice how the colors are more consistent with the Heikin-Ashi candle. As they say, the trend is your friend. Well, it's certainly easier to spot the trend and stay with the trend with Heikin-Ashi candles. And because they take the average of the movements, that is how the Heikin-Ashi candles look smoother. So they tend to stay green in uptrends and stay green more. They tend to stay red in downtrends, which allows us to follow along. So one thing that may throw traders off with Heikin-Ashi candles is the current price is not always the same as the spot price, because Heikin-Ashi candles are calculating the average instead of showing the actual spot price or the close. So in summary on Heikin-Ashi candles, it's a really nice price display. And when I first learned about candles, this is no joke, I was actually given a Heikin-Ashi indicator that I fell in love with, and I still use it to this day. In fact, it's on my MetaTrader 4 charts 13 years later. I'm using my Heikin-Ashi candles as a nice visual indicator. All right, so the makeover is complete. We're looking beautiful. And now we're going to take a little detour to some non-time-based price styles, the Renko chart and the line break chart. So let's start with Renko. The Renko chart might be the cleanest chart and show the simplest analysis of any price style that I'm talking about in today's video. The Renko chart was also developed by the Japanese that focuses only on this, price movement. It doesn't focus on price and time, all right? So these bricks are created when price moves a specified amount. You could be looking at the average trading range of a particular instrument or using a certain pip or tick distance. So bullish bricks are green, bearish bricks are red, and time is not fixed on the Renko chart. So this means that we will only see new bricks when price is confirmed that the movement is up or down a specified amount. Now this helps us eliminate a ton of market noise, and we only focus on confirmed price movement, which helps us stay in the most important trends. So if you take a look at a Renko chart, you will quickly be able to identify a strong uptrend or a strong downtrend. Just take a look. Consecutive green bricks moving up equals a strong uptrend, and consecutive red bricks moving down equals a strong downtrend. So you might be asking, it looks great, I want to trade this. Why doesn't everybody trade Renko charts? Because when you eliminate time, you'll discover how long it actually takes sometimes to see price move. One brick might take a few minutes, one brick might take several days. And if you make it a point to work every day, you might notice that I'm not getting any movement. Trading all of a sudden becomes boring. Also an important note is that Renko charts oftentimes ignore highs and lows, which to technical analysis purists out there, this is pretty critical in our decision making. You know, a range-bound instrument using Renko might just be one brick, where a trader that gets into the trenches can grind out support trades and resistance trades using smaller time frames and candlesticks. So it's still important to use the visuals. So you could use Renko in addition to other price styles to help confirm your analysis and your decision making. But I think that we'll agree, these are great looking charts. So following that confirmation and following that trend is really simple on Renko. And this brings us to our final price style for the day, the line break. Now this is different than the line chart. This is another price style that ignores time and only changes and prints new lines when price confirms movement higher or lower, right? It's using closing prices. So if we're using a daily time frame, the line break is essentially taking a snapshot at the end of the day and determining if price moved higher or lower than the previous day. And so have a look at a strong uptrend and a strong downtrend, and you'll see what I mean. So this is a true story. I was first introduced to line break charts and Renko charts back in 2015 and again in 2017, and I was asked to build strategies around these price styles. To prove the validity of these price styles, I took my best trades and my worst trades, my biggest profits, some of my biggest drawdowns, and I discovered that with one simple brick on a Renko chart or one simple line on a line break chart, I could confirm my entry and trend path with these price styles. So this was an eye-opener and a major discovery for my trading. It's exactly why I also created the Keep It Seriously Simple video series. My trading, my profitable trading focused on price patterns. I was trading head and shoulders, crowns, double tops, double bottoms, rising and falling wedges, bull and bear flags, cup and handles. I spent years trying to perfect my area trading with candlestick charts. And I'll say this, I would never sacrifice the skills that I've learned over the years with technical trading. I love the fact that I can trade price style and structure, right? But with a little extra confirmation and simpler confirmation, like my line break charts or my Renko charts, it makes my decision making so much simpler. So there you have it, a nice overview of all these different price styles, line charts, bar charts, candlesticks, Heikin-Ashi candlesticks, Renko charts, and line break charts. You now have an official introduction to these widely accepted and all very valid price styles. And now comes the fun part, right? Process equals profit. So look at your favorite instruments, review your best and worst trades, and compare the price styles and see how one price style may have made your decision making better. Maybe the Heikin-Ashi candle helped you follow the trend more. Maybe the line break would have helped you wait to enter instead of scaling in a little bit too early and having to manage through a drawdown. All right? So that's for you to review. That's a little homework that I'll give you until our next time that we meet in our live sessions or the next Pulver Report video. Right? So have fun with the process and embrace the process. If something really hit home today or you found something that you really liked, leave it in the comment section. I have several strategies and entire trading courses dedicated to these particular price styles. And if it helps you become a more well-rounded, more effective trader, then of course, I'm all about helping. All right, so that's it from me. Be sure to click the thumbs up button for me, help me boost the video, subscribe to the channel, and help me spread the good word of the Pulver Report. It's free education, and I'm helping subscribers trade better. And hopefully you're trading better and trading to be more profitable. And one fun note for today, if you know what this t-shirt is referencing, okay, this t-shirt right here, I want you to leave it in the comment section, and I'll give 1 gold star to every viewer that gets it right. All right, so until next time, this is Chris Pulver. Happy trading and lots of profits.